Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, July 12th. It's 6 a.m. as I'm starting the video. And as a reminder, as always, you're always welcome to run the video at 1.25 or even 1.5x to move things along, and then simply hit the pause button if there's something you want to go back or take some notes. Then that may make things a little bit more efficient for you. So let's take a quick look at futures. We got a down morning on commodities. Got oil and copper down about 1%. Nat gas down 1.2%. Precious metals down 0.4. And then over in the equity side, we've got large caps down about 0.25%. Small caps down about 0.7%. And then the NASDAQ is actually green by just a little bit, about 0.2%. Looking at macro this week, of course, we've got the kickoffs to earnings season starting with the big banks tomorrow. We've got on Tuesday, we've got JP Morgan and Goldman tomorrow. And then Wednesday, Bank of America, Wells, BlackRock, PNC Financial, and actually Delta reports Wednesday as well. That may be give us a look into airlines. And then, Thursday on into next week, it'll really start ramping up quickly. Also important to note that Wednesday and Thursday, Jerome Powell is back up on Capitol Hill providing testimony to Congress. On Wednesday, that's at noon. On Thursday, that's at, I believe it's 9:30. It always pays to pay attention to Powell. We've got a meeting, Fed meeting at the end of July, and then we've got the big one at Jackson Hole in August. So this will probably be his last public, proclamation before the Fed meeting at the end of July. So if he wants to tweak anything, or if Congress gets him in a box and he makes a gaffe or a mistake, the market will obviously react to that. But 3 weeks ago, we talked about the first 2 weeks in July being the most bullish on the calendar, at least from a historical basis going back to 1950. We also talked about the lead into earnings season is generally bullish. Now that played out last week. I mean, we did have a wobble. We did have, a big scary day. We were down 1% on the open, and they bought that up, finished the week strong. Now we're in the second week of that, and I made note in the blog post this morning. I've got all the dates for the FATMAAN complex, and generally speaking, they're all at the end of July. I mean, we've got Tesla and Netflix on the 20th. Then we've got Google and Microsoft on the 27th. And we've got Facebook, Apple, and Amazon on the 28th. And just generally speaking, I think the FATMAAN complex is going to hold their bid into earnings. But then my game plan is to be out for earnings. I think it's going to be tough. I think there are some risks out there, and I'm going to talk about those in a minute here. The breadth has really narrowed. Not a lot of stocks participating. We're in, the summer doldrums. See how stocks react to their earnings. Not a lot of liquidity out there. Everybody's on vacation. This is kind of like the first summer in 2 years where people can really go out on vacation, and I think traders are going to be a part of that. We've seen the volumes really drop off, and things can get kind of crazy in that kind of scenario. So if you're so inclined, that's a time for maybe you got a vacation on the board as well. So I'm going to stay relatively bullish here the next week, and then FATMAAN into their earnings. But other than that, I'm not going to go out on a big limb as far as a big portfolio, because I think the market broadly speaking doesn't look that great. So let's take a look at it. Here's the 10-year yields we've been talking about. That big plunge over the last couple weeks bottomed out on Friday. Got a little bounce in here to 1.35%. And again, what we've been tracking is rising yields are beneficial to the reopening trade, to the financials, to the cyclicals, broadly reflected in IWM when they're falling. Broadly speaking, good for tech, good for bubble stocks, good for EVs, good for solar. That high beta tech trade usually does well in a stable or falling yield environment. And then here on TLT, the bounce in yields resulted in the drop in TLT. So I was short KRE regional banks, and I was short TLT. I did not close it here at the top. I closed it here on this move on Friday. But if you see TLT come back in to 144.50, 145, from a technical standpoint, that's where you're supposed to buy, because that would be support. And I wouldn't be surprised if TLT makes another run back up to 150, or that rates go back down and retest that low of about 1.25%. So watch for that if you're any kind of if you want to trade TLT, that would be a place to look for a long as it comes back into support here at 145. Oil remains strong, even though it's down a little bit this morning. I would continue to key off on USO, the ETF that tracks oil. I would continue to key off of 49.25. Above that, generally bullish, generally supportive of SPY, highly correlated with rising oil prices. You drop down below 49.25, then might get a little bit squirrely on SPY. So watch that. And I don't have it here, but recently, even though oil is near the highs, the oil equities have not been keeping up. You may have noticed that if you're trading XOP or XLE or individual oil names, they've not been keeping up with the commodity. I don't really know the reason why for that, but the relative performance against the commodity has been lacking in the oil equities lately. Wanted to show this breadth chart. This is the number of small caps above their 20, and you can see here that we're all the way down in the 25% range. So this is saying only 25% of small caps are above their 20 EMA, and generally that's been a decent area to look for longs, and that would be reflected in your IWM type trade, where the small caps are basically oversold here on the EMA 20. And then going on to large caps, here's the NYSE number of stocks above their 50, and you can see here it's only 40%. So what that's saying is that the participation, we're at all-time highs, and we're at all-time highs on the indexes, yet only 40% of stocks are above their 50. So that in and of itself is telling you that participation is waning. It's being held together by the FATMAAN complex, which is, depending on how you calculate it, 25, 26, 27% of the market. And that's why I think the whole thing is a little vulnerable to a rug pull after big tech earnings. Once those mega cap names report, if there's any kind of sell-off at all, there's got a potential there for a more dramatic outsized move, because the rest of the market is already not participating. So I think there's a little vulnerability there. So let's get into the indexes. As I mentioned, we're at all-time highs. Here on the SPY 2-hour chart, we took a dip down to the midpoint of the channel. They bought up that gap down the other day, brought it right back up to all-time highs. I think you can stay long above 433 on the SPY 2-hour. Below that, you'd be back inside the channel. And then, as we've been discussing, once you break outside a channel or a trading range, you don't want to go back in. So prices below 433 would certainly be cautionary. I'd be looking for this gap to fill down to 431 and then potentially back down to 430 for a test of the midpoint yet again. And then, down the road, whenever that might happen, if 430 were to break or the midpoint of this channel, then the bottom of the channel becomes the target. And I know there's a lot of people out there in FinTwit land and stock twits and Twitter, talking about rug pulls and all that. And what I've come to learn is, in order for there to be a big drop, there has to be a little drop first. And what I mean by that is, we'll know. We will see a break of the top of the channel. We will see a break of the midpoint of the 2-hour channel. We will see a break of the bottom of the channel. So these will all be warning points, and there's no reason for us to get surprised on a pullback. And if and when these levels break, we can get more tactical and more defensive in our holdings. And when these levels, when and if they do give way, we peel back our exposure. So we're not going to be out there fully, or at least I'm not going to be out there fully long if I see price breaking these levels. And I'm certainly going to be ready to go the other way on a short selectively if these things break. But that's all down the road. Right now, I think the bias continues to be long. All-time highs are bullish. They're not bearish. Regardless of breadth and all that other kind of stuff, all-time highs you got to buy. And that's my posture, and it's been working all along the way. So I'm going to continue to do that. 30-minute chart. I don't have it drawn here exactly correctly, but you can see the gap down was bought up. We had a gap on Friday. Was that Friday or Thursday? That was Thursday, pardon me. We had a gap up Thursday. We extended. We filled the opening gap, or this down gap from the other day. They filled that on the way up, so that technical objective was met. We have an open gap here below. We recaptured this 30-minute channel. We're walking the line. If I were to extend this line, you'll see we're inside. So now the target is the midpoint of the channel, and you don't want to see price drop back below. So right here on the 30-minute, I would want to hold this 434.50 as a first level. Qs. Very much the same thing. Gap down Wednesday, and then proceeded to buy up that gap down and fill the overhead gap above. Now today, I think you stay long tactically against 359 and look for this all-time high of, let's call it 362.25. Wherever that level is there to be taken out, and then we'll be back in blue sky territory back above. So that would be a positive development. I wouldn't want to see this 359 break, because then we could come back down into 356, etc. So you see the levels there. Here's the 30-minute chart. You can see we made a nice technical recovery here. We jumped back into the bottom range of this uptrend. So now I've got the short-term pivot on the 30-minute chart here at 361, and I'm looking for a move. If the FATMAAN names can remain strong heading into earnings, I'm looking for this to grind higher up to the midpoint of the channel, and then hopefully make a move up to the top of the 30-minute channel, which would be up in the 365 range if we get lucky and all the stars align. Small caps. We had a big technical move down. We had the levels perfectly marked here at 218. We came up. You had another opportunity to buy here at 220. And then we came up, made a little fib retracement, and then gapped up, and then ended up moving higher. Now remember, on a 2-hour chart, this gold EMA, the 200 on a 2-hour chart is equal to the 50 on a daily chart. So this was a nice technical event on Friday, the recapture of both this well-defined support and resistance level, but also the 50 EMA here at 225.75. So what I'm looking for today, although we're opening down about 0.7%, is to hold this 50 and then to make a move to 227.50 and then up to 229. On the downside, we've got support here at this gap at 223.25. I don't want to see it go down there. I'd prefer that, obviously, that this 225.50 would hold, and then ultimately hold this 50 EMA right here, and then drive higher, at least up into this 229 area. Here's the 30-minute chart, basically the same thing. Here's the gap in more detail. Here's that support level, and we've got a little resistance level here at 226.50. You can see at this prior high right here, but then opens up to 227.50 and then 229. Those are your overhead targets. What I've done on all the FATMAAN names is put in the earnings so you know. But here's Facebook. We had to drop down to this support level. We had that correctly identified last week. And now on the hourly chart, it has recaptured this 348, which was important on Friday. Why? Because this trading range was resistance here at 348, and now it was recaptured. So now the technical target is 356. So watch for that, and your active pivot remains 348. So as long as that holds, 356 will be your target. And then of course, if this thing gets going on a pre-earnings run, a breakout above 356 should be bought, and then we'll see how far it runs into earnings. I want to show you the daily real quick. We're inside this nice channel. A break here this morning above. We came down to the bottom of the channel, and we came down to tag the 20. If we can break above this 351, that'll open up the door to this 356, and then a move higher if we can get that run into earnings. Where I would get concerned is a break below this, a break and close below this daily channel. You can see we have not done that since the run. So any close below the 20, which is at 343.88, 343.88 would be a bearish event. Dropping out of the daily channel, dropping below the 20 would not be good. So keep that in mind. Apple earnings 728. We went down to the midpoint of the channel the other day. It got bought right back up, and now we're at all-time highs. I want to stay long above 144 and stay above this channel. I want to show you the daily chart because I think it's significant. We had this big run up. We had the blow off top into the split announcement, and we've spent a year in this ascending, consolidating, bullish triangle, and now we broke out. We took out not only the split high, but this this prior high from back in January, and now we're starting to break out here. And if you take this width of this triangle, which goes from 105 to 135, that's $30, and you add it on to 135 on the breakout, that puts you at 165 as a measured move target. You can see that we're riding the 8-day. All the moving averages, the 20, the 50, and the 200 have turned up. So those are all bullish developments. And not to say that there's going to be pullbacks and stuff like that. But what I'm looking for is continued strength into earnings. And then I'm going to step aside for any kind of disappointment or technical pullback. I would expect to see that. My hope is that we don't see that prior to earnings, and that the stock remains strong into the print in, what is that, 2 weeks, 2.5 weeks. So, and that'll also coincide with the Fed meeting. So that'll be another reason to step aside at that point. I don't want to be balls deep long into, mega cap tech earnings after a big run and into a Fed meeting. I'm going to be pretty much neutral at that point. But Apple looks great technically. Tesla, one of the first ones to report, 720. So that's 8 days out. We had this breakout from the base. We had another consolidation area where it dropped down. It came back to back touch its breakout. Now we're back up here at 655, and I think that is your pivot for Tesla, 655. Let's look at the daily real quick. We had the breakout of the downtrend. We popped up, and now we back tested this downtrend line, and now we're above. And I think if you're on the daily time frame, you can stay long. You'll have to decide how you want to play earnings. I'm not typically one to take a position either way, but you may get a push into earnings over this week, and then next Monday you can Monday or Tuesday, whenever the day before earnings. I think they usually report after the bell, so you could even hold into the earnings day, and maybe you get a little boost on your IV if a lot of people pile in, and hopefully you could get a little run up into 680, maybe even 700, 710. So that would be a great result on Tesla. Microsoft, the 27th. Here we are in the 60-minute chart, operating at the bottom half of this nice 60-minute rising channel. Your pivot is 277, so I would want that to hold the day and then make a move up towards 280. Microsoft is the one that kind of worries me, and this is the reason why. We've been in this nice rising channel, but we're at the top. We've been riding the 8-day for a couple weeks now, or a month. Really, from the 1st of June, we were down at the bottom of the channel. We broke above. We had that. A lot of you have been long the whole time, and now you've got essentially a $30 move in a mega cap stock in a straight line right up to the top of the channel. We can see that prior tags of the top of the channel here resulted in a pullback. Here, pullback. Here, pullback. Here. Stands to reason that Microsoft would do one of two things. Go sideways ahead of earnings, and consolidate this big move or have a technical pullback? Is there the possibility ahead of earnings that it just breaks out? Sure. And if I had lightened up here or even took my position off, if you get a breakout, say above 282, I mean, you can get long with a tight stop and just see where the thing goes. It may go to 290. It may go to 295, 3 weeks from now, and just have a mini blow off top. So, I mean, go by the charts. But precedence has it that you'd expect either a pullback or a sideways consolidation for a while after this big move. So I would certainly will have rolled up my strikes and taken all this money to the bank at this time. Don't leave all that out there. And now Amazon, we've all seen this big breakout. Now it's doing a little bit of consolidation here. I think your 60-minute pivot is 37.25. Above that is blue sky. Below that, you may pull back into 36.75. Here's the daily, just as a reminder. Gigantic 600 wide consolidation. We've clearly broken out. One thing we have not done is back test the breakout. And if you were lucky enough or good enough to get that back test, and for whatever reason, maybe it's after earnings, maybe it's, whenever it happens, if you got a back test to 35.50 that held, that's your second bite at the apple. But otherwise, all systems are go. And, our technical target is 4,100. That comes from adding 600 onto 35.50. So our technical target is 41.50, something like that. So I think now is the time where Amazon is really going to go. And a white swan or a black swan, however you want to look at it, would be a stock split announcement at on their earnings call. Not saying it's going to happen, but that would take you to 4,100 like almost immediately. And if you wanted to take, some kind of shot at that, I mean, you can buy, some August calls, 400 out of the money. I don't know what those would go for, but that would be like a marker out there. You could even buy a spread, like buy a 4,100 by 4,400, $300 wide. I haven't even priced that. I'm just talking off the top of my head. But if you got some kind of split announcement, I can only imagine, like Nvidia, that this would go wild. So Netflix is doing great. Not particularly easy to trade, day to day, hour to hour, choppy. But if you bought this breakout here of this $30 base and into the gap, you're halfway home. Looking for a gap fill up to 550. So now we're at 535. I think you're in the middle here in no man's land. I think you need a breakout of 542.50 or a pullback into 532.50 where you could buy that with a stop just below. But Netflix remains strong and working on its gap fill. Google remains really strong. Earnings 727. We had the big breakout. We had a little pullback, and now we've got an overhead gap here from let's just call it 25.10 to 25.30. That remains to be filled. I think that's going to get filled, and I think you can be long against the gap opening here. If you get a move into the gap, you can get long there for that $20 move. And if it does that, I think it's just going to keep on going and be strong ahead of earnings. So I like Google. Let's look at the daily real quick. I haven't even looked at it. Yeah, we're in this nice rising channel on the daily, riding the 8-day up. I think there's still room to the upside. It's not extended, but RSI is bullish, and PPO is bullish, and we have a margin of safety down here. The 20 is above the bottom of the channel, so that's going to act as support. We've got technical support at 24.50, so I think Google looks particularly strong from a technical standpoint. So that's one where you could certainly be comfortably long and not be particularly concerned on the daily chart, because like I said, there is technical support there. So I'm going to wrap it up here this morning. Just as a production note, what I'm going to start doing is separating out trade ideas and other charts and stocks of interest. Going to do separate videos on that. We're going to stick with broad market indexes and FATMAAN names on before the bell to keep the length at 30 minutes or less. If you're new here and you like the analysis and you like the levels, hit the subscribe button and the alarm bell. Still free. I think you'd learn a lot by sticking with the channel. Certainly give yourself a lot more objective trades where you can focus on your execution. Jump over to the show notes. You will find links to the blog site and how to register for all my content. It'd be great to have you. And longtime viewers, do me a favor and spread the word. Repost a link to Twitter, to Facebook, to StockTwits, to your Discord channels, all the different places where you interact on a daily basis. I would really, really appreciate that. So I hope you guys have a good trading day, and I will talk to you next time. This has been Chris Buss with Traders Profit Compass.